and gentlemen, good day and welcome to the investors call for Cigniti Technologies Limited to discuss the Q3 and 9 months FY24 results. Today we have with us from the management Mr. Srikanth Chikillam, Executive Director and Chief Executive Officer of Cigniti Technologies Limited, Mr. Krishnan Venkatachari, Chief Financial Officer, Mr. Vinay Rawat, Chief Revenue Officer, Mr. Raghuram Kovidi, Chief Delivery Officer, Mr. Sairam Prabhuvedam, Chief Marketing Officer, and Mr. Veera Reddy, Global Head of HR. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Omkar Jalgaonkar from Adfactors PR. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Before the call, we would like to point out that certain statements made in today's call may be forward-looking in nature, and the disclaimer to this effect has been included in the earnings presentation shared with you earlier. The investor call may contain forward-looking statements based on currently held beliefs and assumptions of the management of the company, which are expressed in good faith and in their opinion reasonable. Forward-looking statements involve known and unknown risks, uncertainties, and other factors which may cause the actual result, financial condition, performance, and achievements of the company or industry results to differ materially from the results, financial condition, performance, or achievements expressed or implied by such forward-looking statements. The risks and uncertainties relating to these statements include, but are not limited to, risk of expansion plans, benefits from fluctuation in our earnings, our ability to manage growth and implement strategies, competition in our business, including those factors which may affect our cost advantage, wage increases in India, our ability to attract and retain highly skilled professionals, and our ability to win new contracts, changes in technology, availability of financing, our ability to successfully complete and integrate our expansion plan, liability, political instability, and general economic conditions affecting our industry. Unless otherwise indicated, the information contained herein is preliminary, indicative, and is based on management information, current plans, and estimates. I now hand over the conference over to Mr. Srikanth Chikillam for the opening remarks. Thank you, and over to you, sir.
Thank you, Omkar. Good afternoon, everyone. Thank you for joining us today as we discuss the company's performance for the third quarter. We are pleased to announce that our consolidated revenues from operations for Q3 FY24 stood at 468 crores, marking a substantial growth of about 9.4% compared to the corresponding quarter of the previous year. And comparing to the previous quarter, we have grown by about 3.6%. Our EBITDA margin stood at 13.8%, with the EBITDA standing at 64.5 crores. During this quarter, we are delighted to announce that we have acquired about 6 new logos, further expanding our client base and demonstrating the attractiveness of our offerings in the market. Our pipeline remains strong, although the sales cycle continues to be on the slightly on the dragging side. We've had a slight dent in terms of our revenues in a couple of logos due to insourcing from the client and also one of the customers getting acquired. Although this change, because of the acquisition, has so far had no impact on the revenues, we are continuing to monitor and being cautious about the impact on the pipeline. Having said this, we have made investments into ensuring the pipeline remains strong. We are quite optimistic that we have the possibility of signing some marquee clients in the digital engineering side that can have considerable potential upside in the coming 1 to 2 quarters. Our commitment to revenue and EBITDA goals remain the same despite the challenges business throws at us. We are particularly excited about the significant progress we are making in the we are building in the opportunity pipeline for digital engineering services within our existing accounts. Our performance reflects the trust and confidence that the organizations we are servicing place in our capabilities and our expertise in the digital transformation landscape. Looking ahead, while we remain cognizant of the challenges posed by the global economic landscape, we are also optimistic about the growth opportunities that lie ahead. Our continued investments in technology, talent, customer-centric solutions position us well to capitalize on the emerging trends and drive sustainable growth in the coming quarters. In closing, I would like to reaffirm the unwavering commitment to our shareholders in delivering long-term value. We remain focused on executing our strategic initiatives, enhancing shareholder returns, and fostering sustainable growth, guided by our core values of character, commitment, and competence. While we take questions shortly, I will hand over the dais to Mr. Krishnan to give some detailed updates about the financial performance.
Yeah. Thank you, Srikanth. Good evening to all the investors and for all those who have taken time to join the call. And it's been a quarter, though there have been a lot of challenges on the economic front. I think we have consistently tried to wade through, perform, and then try to remain positive and then work out positive. The quarter also has a challenge in terms of decision makings, and especially where we depend on the Western world, and right from Thanksgiving till the Christmas as holidays, where the number of days gets reduced. In spite of all that, I think we have done a very positive growth to a tune of about, on the INR terms, at about 3.6%, on the dollar term, 2.9%, clocking a revenue of $56.2 million as against $54.7 million in dollar terms. While the EBITDA front probably is at about 13.8%, a tad lower comparing to what it was in the previous quarter, but this is on account of certain exceptional expenditure which has gone into legal, which was necessitated to complete the legal portion as against dragging few of the employer-related issues, which we don't expect or anticipate. I think normalizing that, probably our EBITDA has improved and would have been there at about 14.8% or so. And that was necessitated for us to take it up clearly. And as usual, we have deployed and managed the funds effectively post the distribution of the interim dividend, as well as that has generated a good amount of income, which makes our PAT stand at about 10.3% at a full-blown taxation. I think the quarter remains good, but while it's, I would call that standard for every IT sector, and especially for the company, always traditionally Q3 has been a subdued quarter. And comparing to that, I think overall for the 9 months, our EBITDA stands at about 14.2%, while we have anticipated it to go through based on the current set of run rate for the quarter. I think we expect to end the year positively year over year comparing to last year in terms of the growth, while it is marginal. But given the situation and the way we have devised our strategies, I think the strategies are working with respect to the nurture and growth accounts moving up in a bigger way. The top 20 accounts continue to contribute a healthy 54% to the contribution to the revenue. We have added about 9 new clients in the quarter, and we have added about 6 clients in the quarter and 9 in the last quarter, and which is also notable. We have started penetrating on the digital engineering services, which is contributing about 10-11% of the total revenue, and our increased thrust remains the same on the digital revenue. And the sectors which are contributing in summary basically is that retail, BFSI, and travel and healthcare continue to contribute about 70% plus of the total volume of business. And out of which healthcare stands out in terms of the highest margin. And our focus on retail is expanding and expected to contribute in a bigger way in the coming quarters. We are optimistic. The dollar rate and both on the top share and onshore has moved up marginally by about $0.50, and our utilization is at peak in both these segments, hovering around an average at about 80%, and we are at a healthy trend in terms of the resource peak utilization at about 21 to 79, 21 being on-site and 79 being at offshore. We have generated a good amount of cash during the quarter, and if you look at the overall 6 months, cash from operations generated has moved out to close to about 120 crores, which is the first 2 quarters had a subdued growth, and subsequently we have generated a good amount of growth. The receivables are under control, and we still have at about 58 days. And even if I look at some amount of unbilled revenue based on the projects, which are milestone-based, I still land up at about close to 65 days. But I think on a stricter invoiced revenue, we are there at about 58 days, which is good control. And we don't see any, uncertainty on account of bad debts or any kind of write-offs. And so the way things are moving up, I think the order book position looking healthy. And we are expected to finish the quarter and move ahead, and we are always looking ahead for the next year. Next year looks, we are highly positive, though we are cautiously watching the global economy, but I think we are extremely positive on the future growth for the coming years. With these few words, I'll open up the forum and request my colleague and the CRO, Vinay Rawat, to say a few words on the business and outlook.
Thanks, Krishnan. I think I'll just reiterate some of the facts which Srikanth and Krishnan mentioned about in terms of the customer. Customers are being very cautious. The overall underlying drivers for the customers are still cost optimization and consolidation. Discretionary spend, which actually was very significant during pandemic time, actually continues to shrink. Customers are still very cautious about bringing back that discretionary spend, and that shows up in the elongated sales cycle, which actually we have been facing in some of our customer places. Our new logo growth actually has been pretty healthy. The size and quality of the revenue is something which actually has improved very significantly. Our focused account classification, go-to-market strategy, which we implemented, actually has been showing very healthy growth. As Krishnan mentioned, our top 20 account actually continues to grow year over year. Our relationship into those accounts actually continues to grow, and our overall relationship metrics has been increasing, and we are becoming more and more strategic to those customers. Our service line spend into these customers actually has been increasing. Means we are getting more and more traction into digital services, and therefore expanding our footprint and getting more wallet share from the same customers. Our top 74 accounts where predominantly the sales focuses, their expansion of revenue actually has gone to almost 90%, which is, as I mentioned earlier, actually is testament to our account-focused approach. Overall, what we see right now, what we actually observed at the end of third quarter were customers being a little more cautious because of not a very certain environment, particularly from an interest rate perspective. The cost of capital obviously continues to be expensive, and therefore customers are still not opening up the purse. So there, as Krishnan mentioned, I'll reiterate that we continue to be optimistic. Despite all the headwinds, we have actually delivered sequential growth, and we think we will continue to be growing significantly in the coming quarters. With that, I will hand it over to my colleague Raghu, who's our Chief Delivery Officer.
Okay, thanks, Vinay. I think you heard about the business outlook. From a delivery standpoint, we continue to balance and tightly run the operations to ensure that we continuously improve our margins. Our customer satisfaction score for the quarter has been, again, a record high, about 3.84 out of 4, with about 80% coverage from our clients. We are continuing to see increased digital engineering services appetite, specifically in the areas of SRE, DevOps, and data. So this quarter, we also focused on increasing more capability and capacity, both at the leadership level and the workforce level, to ensure that we are able to ramp up teams as and when required. Our focus on continuing to deliver value-based services through our IP continues. We have been out of the 6 logos that Srikanth and Krishnan were mentioning. At least 3 out of those 6 logos, we have been able to show our IP story as a differentiator. So that focus continues, and we are very hopeful that as we get into FY25, we will be able to further ramp up on the digital engineering services business. Thank you.
Thanks, Raghu. Thanks, Vinay. I request Sairam, our Chief Marketing Officer, to give us perspective from the marketing side. Yeah. Sai, over to you.
Yeah. Thank you. I hope I'm audible. In line with the commentary of all our executives, in fact, on an interesting note, the Q3 quarter is where all the global analysts actually give up the most updated positionings, and I'm very delighted to let know our renewed focus on strengthening our digital engineering positioning got a significant flip in the quarter that went by. We've got about 22 recognitions, of them 16 on the digital engineering side. And most importantly, so IDC has positioned us for the first time as a major player in the worldwide software digital engineering services landscape, which is a very, very big jump for Cigniti's march ahead. Along with that, we have been provided a very special recognition as an emerging company in the digital engineering operation and technology services landscape by IDC. 7 of our case studies in the world of analytics, data, AI have been featured along with 16 tier 1 digital engineering companies. We've also been specifically positioned as a major contender in the data and analytics segment, which goes to show the strength of the data engineering practice that we have been building in the mid-market segment by Everest. On the digital assurance side, I'm delighted to let know for the first time, we've been positioned by Everest as a leader with star performer rating in the specialized QE services providers, which is a new report that Everest launched, and also as a major contender with star performer rating in next generation quality engineering, which is nothing but digital assurance. So that said, we've also got some very specific vertical recognitions in the area of lending and IT services assurance. ISG is positioned as a leader in continuous testing. And Forrester, after a long time, came up with a new continuous testing automation landscape report that Cigniti was specifically called out. Last but not the least, we have been positioned as a disruptor by HFS in the world's first generative enterprise services provider report, which again goes to show the deep reflections of AI-led digital engineering, generative AI, computer vision, machine learning areas that we are investing to work. And Forrester put us as a specialized provider in application modernization and migration services landscape, which is a reflection of the enterprise application services, enterprise modernization practice that we are building. And we are also coined out in the Zinnov ER&D zones for specific Internet of Medical Things, Internet of Things work. So that's from an analyst positioning. To summarize, it goes back to the strong foundation that we have laid to march in the digital engineering landscape with a very substantial leadership in digital assurance. Our both IPs, as Raghu rightly said, Zastra and Blue Swan were finalists in the worldwide WAC Humphrey Awards. And before I end, I just want to give an important anecdote. The Forrester's latest report, which is a month old, also tells that the impact of generative AI will actually yield a substantially incremental 2.5% spend increase in the world of testing, because the entire test life cycle is expected to be augmented with generative AI infusion. and a 15.5% CAGR growth is what Gen AI-led digital engineering is projected, and Cigniti is playing in both the areas with substantial focus. So that's from a market positioning perspective. I will now give it back to Krishnan.
Thanks, Sai, and over to Veera, our Global HRA, to talk a bit more on the sourcing and the resource retention and attrition.
Okay. Thank you, Krishnan. Thank you very much. Good evening, everyone. This year has been fairly good from an HR point of view. Employee satisfaction levels are high and attrition is trending very low. We are currently running below 13% and hopeful the same trend continues through the next 2 months of this quarter. And we are optimistic that we will end the year below 13%. We also going for the renewal of Best Place to Work. We have been rated as Best Place to Work, Great Place to Work for last 2 years, and then third time in a row we are going for it, and then it is coming up for renewal in May. With the current satisfaction levels, I am sure we will get it for third time. From a training and development point of view, last quarter we have actually successfully completed a training program at one of the engineering colleges in Hyderabad. We have trained 50 plus students on some of the skills that we need so that it reduces the time of a fresher coming in and then joining into a project. So we are now looking to absorb these students in the upcoming quarter, which helps in our pyramid fresh as well. And we'll continue to focus on this as a investment and then pyramid refresh program as we move forward, and then look for doing it in more than 3 to 4 colleges next year. So those are some of the updates from HR, and then we'll be happy to answer any question. Back to you, Krishnan.
Yeah, thank you. Thank you. I think over to advertisers, we can open up the question to the moderator. Please open up the forum for question and answers. Yeah.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touch-tone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Swecha from Whitestone Financial Advisors. Please go ahead.
Hi, sir. Thank you for giving this opportunity. Sir, I have a couple of questions. One was, the 6 logos that we have added. If you could just help us understand, which sector these logos are from, like which industry, and typically what kind of work, have we got from that? Is it more on the digital engineering side, or, what kind of scope of work these 6 logos, we've done for? Second, also, if you could give some sense on the order book, the current order book, and even on this order book, what percentage would be from digital engineering kind of services? And also, I wanted to understand broadly, what kind of services are we looking for the digital engineering side of our business? Some sense as to, how big can it be, and, what are your thought process, how to build this, and what are we thinking about it?
Okay, so let me, I think there's quite a few questions actually you've asked. So let me first actually talk about the customers, the new logos we acquired, in this, in the last quarter. They are not specifically for, from one industry segment. They are spread across multiple segments. However, some of the larger clients which we acquired actually are from BFSI. One of them is actually from BFSI. Another one is actually from rail transportation industry. They are one of the largest rail transportation company in North America. One customer is actually in retail. This is a European customer. So as I said, they are sort of distributed across. The kind of work which actually we will be doing with these customers is actually mixed. It is an integrated work where we are, in almost all the cases, we are actually transitioning the work from some of our larger peers in the industry. This is applications, application maintenance, application integration testing, also the application support requires development work for any function or feature which is actually required during the application sustenance phase. So that's what it is. So as I said, like it's kind of a mixed work in development and quality engineering. You asked a question regarding
in general digital engineering. Okay.
Yeah, you asked a question regarding digital engineering. Now I will actually divide the question into two parts. One, the work which we do in the quality engineering side also actually happens to be in the digital areas. So if you were to actually purely looking from a digital digital revenue, that digital revenue is almost 60% of our revenue which we do today. However, specifically on the development side, that revenue stands close to about 10 to 12% of our overall revenue, from digital engineering perspective. As far as order book is concerned, that continues to be pretty healthy. If we look at where we were last year and year over year, our order book actually, it continues to be improving. Our revenue realization of the order book actually is within the industry range, which we have seen from our peers or even the larger peers in the industry. So that, as I mentioned earlier in my commentary, and Krishnan also mentioned, that continues to remain healthy. I will actually give it to Krishnan for giving specific numbers around order booking. Did I answer all your questions, or is there anything specific I missed out?
Yeah, just to follow up. So when we say digital engineering services on the development side, so you said we are 10 to 12%, and I believe in the commentary, what I heard is we are quite, optimistic about increasing this revenue share from the development side of the digital engineering services. So if you could, help me understand exactly what do we do on the development side of the digital engineering services, like what kind of work do we do there and how big this can become for us?
So over last 12 months, we have doubled our digital engineering services, which I'm purely talking about in the development space. And just to also, again, clarify, digital engineering means different things to different people, but and it's a very large umbrella. So the scope which actually we have defined for ourselves today within digital engineering, that business is something has doubled, and we expect that to continue to grow at a similar pace for next year as well. So we are very hopeful that we will actually double it again in the coming year.
Okay. Thank you.
The order book, coming back to the order book position, basically, so benefit of all the listeners is that we have a confirmed order book position for April to March for the next financial year is at about close to $205 million. To answer your question is that how much could be on the digital engineering? We are at about 11% on the...
Sorry. Could you just say that? I missed that number, sir. I'm so sorry.
Yeah, it is $205 million is the order book billable for the period April to March, and as it stands today. And coming back to the order book in terms of digital engineering, I will put it out this way, is that the increased thrust is on digital, while the current year revenue will end up at about 11-12% of the total revenue, the way at which it is, you have seen the 3 quarters and the 4th quarter getting repeated out and things like that. But I think we are trying to push that to close to about 18% in the subsequent year with a nominal growth, which we hope to have. We don't give any guidance, but I think we expect a high double-digit growth for the revenue, which should contribute at about close to 18% or so should be on the digital side. So we are fairly piled up on the order book. Yeah.
Okay. So I just have one last follow-up. Can I just ask you?
Yeah, sure. Please go ahead.
Okay. So just on the EBITDA margin side, like you said, EBITDA, so any guidance can you give, because our EBITDA was lower in this quarter. Any ballpark number that you feel? Yeah.
Yeah. No, actually, as I told you that absolutely we are not putting in any number in terms of the guidance. But what happens is that if you look through last year, we have been at about 14% order. This year we have sustained that, and we will sustain, because if you look at 9 months, we have been there at about 14.2%, and we'll sustain. And this quarter specifically, a blip is on account of the